Well, good afternoon. You're with us on Closing Trades. I'm Abha Bakaya. With me, Aisha Faridi. Markets this afternoon pretty flat, but lots of stocks that we continue to track for you and continue to catch our eye. From a Vodafone, which is up 17-18%, to a Titan this afternoon, Tata Consumer Products, a couple of these names, even a Tech Mahindra from that stable, and then a whole host of the other movers that are continuing the uptick today, Biocon, UB, UPL, and so forth. So we'll come to that in a moment. Let's just tell you what's lined up for you. We've got commentary coming in from Chris Wood saying that he remains bullish on India, sees the worst as being over, and will remain invested. Mark Mobius also saying India has become the largest in our portfolio. Sectors to invest in: Saurabh Mukherjee bullish on auto, API, select financials. In an ET Now exclusive, the government mulling oil seed mission for Atmanirbhar in edible oils. A twist in the AGR tale, and this is an ET Now exclusive yet again. Curative pleas on the verdict are likely. ET reports that the Adani Group is mulling $1 billion fundraise via 10 to 20% equity sale. The JSPL management on the steel price hike, Oman deal, and demand revival. On ET Now, all of that and more. Piyush Goyal speaking at a CII event saying it's time for Anand Mahindra and Uday Kotak to mentor entrepreneurs. The FM bankers meet. On the agenda, loan recast, also reviews of schemes like the credit guarantee scheme, all of that and more coming up. And in a conversation with the Concord management, we speak about the Atmanirbhar push, divestment, infra expansion, and more.
Okay, let's walk you through the price action in the markets, and it's turning out to be one of those very, very quiet session for the Nifty. I don't know if we are going to go totally replicate what transpired yesterday when you had the last hour push and we made it to a 0.5% gain, but for now it's been a very, very quiet session. 11,570 is what we are holding on to when it comes to the Nifty futures. The breadth as well, I can't say by a huge margin, but we're managing to favor the advances as of now. Infratel is holding up 10%, Titan is scaling up 5.6%, UPL, iShares, TechM, these are the big movers. From within the broader markets, idea ahead of its board meeting and fundraising is in a tizzy, 18% higher. 1175 is where the stock is right now. You've also got a Tata Consumer which is scaled up in excess of 4.5%. 580 is what the stock is nudging, and then Mahindra Finance as well, 623 on that stock price. On the flip side though, Page Industries, after human rights violation allegations coming in from the Norwegian fund, you're seeing Page fall by about almost 3% Indiabulls Housing, ICICI Bank, Coal India and Hindalco are some of the other laggards in trade. Let's get in a quick chart check on where the markets are headed and some of these individual names as well. Rajesh Palviya from Axis Securities joins us on the show right now. Rajesh, hi, afternoon. What is it that you're making of the index? Which direction is the index going to take after what looks like a very quiet session so far?
Yeah, good afternoon. So if you look at the indexes, like today we have a weekly expiry. So looking at the derivative data, it's going to be muted kind of expiry in terms of indices. But, stock specific action is going to remain continue in the market. And we believe that, the sector which is, showing very good buying interest is pharma is showing very good buying interest. Since last 2-3 trading session, we have seen a lot of accumulation in the pharma space. And looking at the bank indices also, so data is suggesting 23,800, 850 is the zone where lot of call writing is there. So on the expiry day today, especially for today's session, we are expecting that expiry is going to remain muted in terms of Nifty as well as for the bank Nifty. But yes, looking at the overall setup is positive, and we believe that again we will continue upward momentum. And on the Nifty, we are expecting 11,650, 700 zone can be seen in the next 1 or 2 trading session. One can keep their stop losses at around 11,480 zone for Nifty, and Bank Nifty, the stop loss should be at around 23,450, and we are expecting that the rally is likely to continue in the Bank Nifty also, and 24,200 should be the target in the next 1 or 2 trading sessions. So overall setup is positive for both the indices. Sectorial rotation is happening. The new emerging sector, which we believe that pharma sector is going to perform from here onward.
Sure. Okay, that's the take coming in the market so far. Going to discuss individual names as well. But before we do that, let's take it across to Vivek, find out what Chris Wood from Jefferies has to say about his India call.
Well, Chris Wood, in his latest interview in the Economic Times, has actually said and has given quite an important quote. He's saying that he will continue to stay invested as far as the Indian markets are concerned. He believes that the worst as far as the pandemic-induced lockdown, as well as in terms of equity market, he believes that the worst is over. What he also says is that as far as India is concerned, his understanding is that the net recovery rates are improving. And in fact, he believes, even though the caseload is something that continues to rise, and this is something that he has also written in his weekly newsletters, he believes that the death rate in India is really low. The market is probably taking the view, according to him, that the worst has been seen as far as India is concerned. He believes that the lockdown was something that is a bit of a misguided policy. He believes that the lockdown should have never been imposed in the first place, and the lockdown was quite negative as far as the Indian economy is concerned. What he is saying, as far as India is concerned, he would continue to stay invested in India. He believes that there are better markets to invest. However, he does not think that the markets will go back to the lows of March that the Indian markets witnessed. He believes that the government, which has not extended the moratorium, this is a bit of a positive move, and he believes that the restructuring process is much more positive as compared to having a moratorium extension. At this point of time, while he is not positive on Indian banks, he is a little less negative. Again, the most important thing to watch out for is his long-term view on gold. He is extremely bullish as far as gold is concerned. He believes that the fact that the US real interest rates are expected to remain quite low, and he believes while in the short term gold can correct a little bit more, he believes that there is going to be a long-term bull market as far as gold is concerned.
All right, let's also hear out a view from Mark Mobius, also sounding very bullish on India, really where he sees opportunity here.
Because if you remember, I think last time we talked, India was third after China, Brazil, and then it was India. Now India is first, which speaks well for India and the tremendous performance we've had.
Which are the 3 stocks you own in India? I'll take my chances with that. I'm sure that our viewers would also like to know.
Well, I don't want to talk about individual stocks because I'm afraid that the people will think that they should be buying them. So I prefer not to. But you can go to the internet and check to Bloomberg what the Indian stocks we hold are. Let me say this. They are focused on the infrastructure area and also in the medical area. We're very interested in the medical sector. So those are the 2 areas that are very important for us.
Okay, so those are some of his picks as well. It seems like pharma continues to be one pocket, pharma and healthcare, that everyone continues to focus on. Rajesh, let's take a look at some of the other movers today, and we are definitely seeing some of the pharma majors also bounce back, but perhaps not as active a move as we've otherwise seen in those counters. Within the basket though, where would your preference lie? As Sun today is still up 1-2%, for example. Biocon has been roaring away this week.
Pharma pick, I like Sun Pharma, and I've identified this stock to recommend here. So Sun Pharma one can buy because if we look at the overall setup, the stock has given breakout in the last 3-4 trading session, but due to volatility it has corrected. But again, a stock has formed a base at around 515-520 zone, and in today's session we have seen almost 4% kind of open interest addition in the Sun Pharma. And looking at the overall sector is showing good buying interest, and so we believe that Sun Pharma can move towards 545-560 zone in a near-term basis. So one can buy with a stop loss of 518. The Sun Pharma is looking very attractive. Other stock which I like from the pharma space is Torrent Pharma. Torrent Pharma has shown very good buying interest in the today's session, and the kind of accumulation which we have seen in last 3-4 trading session, we believe that Torrent Pharma can continue further upward momentum towards 2850, 2860 in the coming trading session. So one can buy Torrent Pharma from the Pharma pick with stop loss of 2750. So these two stocks are looking very attractive from risk reward point of view in the pharma space.
Okay, that's the word coming in on some of the stocks that are looking interesting. In fact, let's also hear it out from Saurabh Mukherjee from Marcellus as well as to what he's liking in the market right now.
Three sectors where I think we could see a multi-year strong rally. First is auto. We're seeing blistering numbers in the auto sector. Initially, I think we were all fearing that June, July could be a flash in the pan. But through August and now I'm hearing even through September, demand remains strong. And if cost of money stays low, and my reckoning is cost of money will actually go lower, therefore auto loans become even cheaper still, we could see a multi-year recovery in auto stocks. They've been pounded for 3 years. Typically, auto in our country goes through 6-7 good years, 3-4 bad years. We're sort of overdue a recovery, and maybe COVID was the trigger that the auto sector needed for a strong run. So I think that's one straightforward sector one should consider. If there's a Make in India angle, then so much the better. The second is the lending side of financials, right? We've been saying for the last 3 or 4 months that what COVID will do is it'll crunch the balance sheets, it will damage the balance sheets of most of the PSU banks, most NBFCs, and therefore it will trigger a massive consolidation in our both banks and our NBFC sector. Even the best banks in our country are still down 15-20% from January, February, and as we get out of morat, go through restructuring. Once we reach the end of the fiscal, I think the weaker lenders will start getting crushed, and therefore we start seeing a multi-year rally in high quality financials. And the third sector is the whole play around APIs, chemical intermediates. I think there's a lot of private equity money heading towards that sector now. And if the tensions with China continue, India will have to bring a lot of API manufacturing from China to India. We are almost entirely dependent on China for our API. That's not sustainable from any perspective. And therefore, I think we're heading into a multi-year boom on API manufacturing and the entire ecosystem which feeds into API manufacturing.
Okay, welcome back. We've got Sandeep Sabharwal also joining us this afternoon. Sandeep, good to have you with us. The index is a little quiet, but there's no dearth of activity. There's plenty of action if we take a look across the board. A spate of counters. Vodafone is up another 20% today. Maybe we should just start off on that. We've been talking about it. And now, of course, Nayantara reporting in an exclusive story that there may be curative action against the verdict. There might be some pleas brought forward in terms of the math. But the stock, even on news of possible fundraising plans, is up and away since that verdict. 18% again today.
Yeah, so I think the day on which the verdict came out, the stock got battered. I was quite intrigued actually because the verdict actually was in favor of most of the companies in the sector. So so if at all it could have been negative for Jio because it created a space for the other incumbents, the Vodafone and Bharti, to survive and possibly thrive going forward. So I think that's how the situation lies. Now, Vodafone Idea, of course, has made its intent clear that they are going to remain in the play and they are in it for the long haul, and they are planning some fundraising to fund essentially the payouts they need to make over possibly, I think they could upfront the fund raising for a couple of years at least. So that's how the situation lies. It's actually very tough to put an equity value to Vodafone given their huge debt burden and the pace at which the entire tariff scenario will change is tough to predict, although Mr. Sunil Bharti is on record saying that ARPUs will eventually have to reach rupees 300 from wherever they are. So that's almost a doubling. They are clear beneficiaries. They have already paid out what was required. So I think they might not need to pay anything for the next 3-4 years. So they are well placed. So for long-term investors, Bharti is a better play. For people who want to make some short-term gains, possibly Vodafone has the possibility of rising even further from the current depressed levels.
All right, so that's on Vodafone this afternoon. Sandeep, let me get your view in on some of the tech names all weighing in. In fact, starting from yesterday, we started to see some amount of contribution coming into the index from the IT heavyweights. I mean, they remain a defensive play, but also in terms of opportunity or strength, where within the basket would you be focusing on? Mid-cap names have also been starting to see that leg up, in the last couple of sessions.
The technology, in my view, is almost fully priced, and it takes into account a possible traction in the businesses of most of the companies, but it does not right now take into account any pressure that could come into margins, either due to client renegotiations or due to the appreciation of the rupee, which has happened. So rupee is appreciated, as of all of us know, quite significantly over the last few weeks. So IT as a overall story, like you said, it's a defensive play. And it will remain a defensive play given their strong cash generation nature of their business. But at this point of time, I find little value in any of either the large cap or the mid cap names.
Take it across to Nayantara Rai as well and get in that exclusive bit of news that she's picking up, that perhaps there is going to be a recalculation altogether of the AGR dues, and that is also sort of aiding the mood and momentum on Idea today.
This is an 18-hour exclusive where we're being told by our sources that lawyers, legal counsels, general counsels of Vodafone Idea as well as Bharti Airtel are preparing curative petitions to file at the Supreme Court on the AGR case. Big sums are we talking about. For Vodafone Idea, it's already more than 50,000 crore rupees at stake. So what will the curative petitions be filed on? What basis will they be filed on? We're being told by sources it's likely to be on the quantum. It's very right that anybody who files a curative petition finds the correct basis, one that's going to stand up in court, simply because this is the last resort, literally. So the window of opportunity being sensed at, according to our sources by Bharti Airtel and Vodafone Idea, is on the quantum of AGR dues, where we understand that the companies feel the government has miscalculated AGR dues in a few circles. Now, when licenses have been given in the past in India, it's given in circle wise, so 22 circles. So if you, according to the companies, make a few mistakes in a few circles, it compounds over the years because you add interest on interest, and then suddenly the sums become very, very large. And this is what we are understanding from our sources, that the miscalculation, because of which there has been compounding, could result in the companies saying that they owe far less than what the government has so far calculated. It's clearly a developing story. The AGR verdict, it of course provided a 10-year time window for all the companies to pay the outstanding AGR dues. The government had wanted 20 years, but it seems from the timeline, it's the arguments that are going to be now argued in the Supreme Court, if at all the curative petitions are filed and admitted, will be on the quantum of dues.
Sandeep, while we can argue about whether the court will hear this plea or not, and whether the AGR dues have been undercalculated or overcalculated, let's not go there. But if markets are reacting to this buzz, then Bharti should also go higher. Bharti is not going anywhere because an idea is going up. Because if the AGR hearing starts again, or if a review petition indeed is filed, it will have a very positive rub-off effect, or a very positive effect even on Bharti.
Yeah, so Nikunj, I think it's positive for Bharti in any case. So I think day-to-day stock moves are tough to predict, but I can say categorically that I believe at current prices and on any correction, Bharti remains a very good buy for anyone who wants to hold on for any time period, 1 year, 2 years, 3 years. I think it's going to do very well. Stock is undervalued relative to both market valuations as well as what fundamentals could be. So what happens on a particular day is tough to predict. It could be some people rebalancing because of weightages. So there was some news on some foreign weightages, some index weightages being changed. It could be some particular fund exiting or selling. So I think on a day-to-day basis, it's tough to predict. But for longer-term investors, any dip which is created by such short-term pressures should be only used to buy.
Well, Titan, hello, 5% higher suddenly for Titan. Now, this is one business where we know that there is a challenge. There's a serious challenge. Footfalls. And they may come back, they may not come back, but even if they come back, this year is going to be a tough year for Titan. But Titan suddenly a short of 5%. Tata Consumer is giving Titan some company. You got United Breweries, which is up for the second day on the trot, and then you got Nestle and good old Asian Paints, which are making a very strong comeback. Sandeep, off late, the markets are in a sense really buying or revisiting beaten down or fallen agents, a point we were discussing earlier this week. So I'm revisiting that point, Sandeep, with you, which is a Z, a play on economy, Tata Motors, a play on restructuring, Titan, a play on consumption, IndusInd Bank, a play on balance sheet. Now these are good companies, recognizable names, they've fallen down, but markets are really revisiting them. What a move it's been in a Z, what a comeback it's been in Tata Motors, what a pullback it's been in a stock like IndusInd Bank.
Each one of them have different stories and some of them might not play out. For example, Tata Motors excitement is around the statements by the chairman that they'll make it debt free in 3 years. I think in my view, it's an impossible task. I don't think that's going to happen. And if that happens for some reason, then the stock will be obviously much, much higher. The CV cycle will be in a tough space. JLR is still in a tough space. So I think Tata Motors, the move has happened now. I think people should be circumspect. Same, I would say, with IndusInd, the balance sheet repair is not done. There is significant stress in the balance sheet. And to that extent, I wouldn't play that. But among the stocks you named, obviously Z does have value. It's got huge intrinsic value. Even if we take into account the market share losses it's going to have due to OTT platforms coming up, etc. Because eventually it's a formidable player, and if whatever the FMCG companies, many of the consumer companies are saying about what they expect in the festival season, then obviously the ad market is going to come back strongly and that will benefit Z. So Z, I wouldn't say it's a secular play, but I think it's definitely a play. It's definitely still, despite the run-up, undervalued relative to fundamentals. So when you also talked of Titan, but I think Titan is quite expensive. But from my perspective, when I look at the spaces around in the market where I think the stocks are still undervalued relative to fundamentals, I'm looking at 3 stocks. First is Dabur. I think Dabur is doing extremely well. The stock, after the results where the company stock quite positively, it's still not rallied subsequent to that. I believe that intrinsic value is strong here. Second would be United Spirits. I think United Spirits, the stock has not moved after the results. There are concerns on restriction on alcohol sales, timing, etc. But I think those will go away, and it's got a strong tailwind in form of significant sugarcane production, which will aid its cost structure. And third, the stock which we have often discussed, UPL. I think UPL is significantly undervalued. People are not appreciating the significance of prolonged low interest rates globally on its balance sheet and its ability to repay its debt and convert that debt value into equity. I think that's also significantly undervalued. So I was looking at these things over the last few days, and I think these are the 3 stocks which I still thought are relatively underappreciated in terms of the expectations of analysts and people are lower than what these companies can actually deliver.
Okay, we've got the rupee weakening as well. Let's just take a check, in fact, on how the currency is trading right now at 73.47 versus 73.03. That's its biggest single session fall it's seen against the dollar since May 4th. So weakening there, despite a couple of sessions where we did see it kind of stabilize. Now it's kind of once again starting to slide somewhat. So that's just to check on the rupee for you this afternoon. Okay, in individual stocks as well, we've been tracking a whole bunch. Jubilant Food on our radar today, Sandeep, given the numbers, of course. A slightly mixed bag on the numbers, but outlook continues to be optimistic, and in terms of stock price movement, it definitely continues to be favored.
And actually I analyzed Jubilant after the results and after I heard the management on the conference call. In my view, the management is too much focused on the short run right now. They are just focused on delivering short run profitability and delivering what the analysts want. So they have decided to shut down a large number of stores which have been around for a long time to cut costs. They have moved their employees to fully variable salaries, which can work well in a downturn when those people don't have alternatives of employment. But once things open up and once alternative employment opportunities come, you could see attrition and they might need to go back. They have entered into the FMCG space through the launch of certain products, which is a totally different space from what they are doing currently. And they could potentially deploy decent amount of capital out there over the next 2-3 years. So if I look at where the stock is, what the company is doing fundamentally and the valuations, I would take a contrary view to what most analysts are saying, and I would actually recommend taking money off the table from Jubilant, if not fully, at least partly.
All right, fantastic. Let's in fact hear the management on the con call post those earnings.
We are hopeful that the business will continue to improve gradually over the next few months. We expect near normalcy by the exit of Q4 FY21. We remain excited about the medium to long-term potential of our category and our business, and we have no doubt that we will emerge from this crisis better positioned to participate in the opportunities that lie ahead.
Okay, let's move on while the index sits quiet, and you've got the Tata group of names definitely holding a buzz in trade, what with the move coming in at Tata Motors and at Tata Consumer, as well as Titan, which is now scaling higher by about almost 5% as we speak. Metals as well, that's been the other shining pocket. So let's welcome on board Mr. V.R. Sharma, the MD at JSPL, joining in on the show right now. Mr. Sharma, hi, good afternoon. Everyone wants to know about your Oman deal. So with now that completed, will you be focusing on the power business next?
Yeah, thank you very much and good afternoon to everyone. Oman deal is, yes, it is true. And power, we are yet to take a decision. Hopefully in next week we'll have a board meeting. So unless the board meeting decides I'm unable to speak anything, the agenda is not yet finalized, but otherwise the steel business is doing very well. You must have seen the results. We have gone for stand-alone steel increase in production and sales by 37% on YOY basis, and so far things are good. Steel is doing well.
Sure. You know, for long, Mr. Sharma, it's the steel business which has overshadowed the power business. If indeed the demerger of the power business does go through, how is it that you are valuing your power business standalone?
You see, power at JPL, if you see, it is a very promising business because for the last couple of years, there are not many power plants which has come in the country. Still, the power demand is pretty high, and we feel with the industrialization coming in, the power demand will rise in times to come. I think in Q3, the power demand should go up. And today we are already seeing the result of post-pandemic or post-COVID situation, that our PLF has increased to 78%. So power alone also itself is a very good business, and whatever the receivables were there from government of Tamil Nadu, Kerala, so these receivables have also started flowing in, and by the end of this year, I'm sure the power will be at its own. I mean, this will generate a quite substantial profit.
I don't want to get this one wrong for our viewers, but in principle, before the calendar ends, do you think the businesses would be demerged?
I cannot say till agenda is placed on the table in front of board, so I can comment only in the next week.
Okay. I want to go back to steel price. Why are steel prices going higher when generally there is overcapacity in the world? Steel prices cannot go higher only because of local demand. It's a function of what is happening in the world. Do you think steel price appreciation is largely because of demand coming back, or this inventory built up which is happening?
This is a cumulative factor. Basically, there are three major factors in it. One is the scrap prices are up all-time high in last 1 year. So these are now about $320 to $330 a ton. The reason being that because of COVID in America and also Brazil and Europe, so the scrap collection has gone down. So this scrap collection, which was not done in last couple of months, so that has given an impetus to the price of scrap. Now when the scrap is not there, people move to pig iron, they move to DRI, they move to sponge iron, and that has elevated or increased the prices of these metallics. Finally, what has happened that China, they took a V-shaped recovery post April 2020, and they started consuming day in, day night. Though their production has also increased by 3%, but still they are importing a lot. So that has created a shortage in the world. Now, what is happening, since India is in the Southeast Asia, and we are very close to the countries like China, Taiwan, Vietnam, Philippines, Indonesia, Thailand, Malaysia. So the demand from these countries, that has erupted like anything. The basic reason is because China is importing. So China is not exporting the semi-finished material or the finished material to these countries. So now they are scouting this product from India. So that's why the steel prices, they are very lucrative today when we are exporting. This is one. The other is domestic demand has picked up of late in last 2 months' time. And now all of a sudden, we are experiencing that domestic demand has gone up by about 140 to 150% as against of July. So all these cumulative factors are there, that there is a shortage of steel today. And as far as the prices are concerned, because the iron ore prices have gone up in the international market, also domestic market, the iron ore prices have gone up. So that has led the iron ore firming up everywhere, and that has also driven the price increase.
Sure. Okay, what about demand in India as well? You know, to what extent has it been hit by the rainy season, and where are we versus pre-COVID levels? If you could just shed some light on that.
You see, rainy season is not playing any effect. Basically, it used to because during COVID period, say for example from end of March to June, the stockists, they had adjusted their stocks and there were no stocks available. So most of the traders in all major cities, they were dry. And the moment the market opened, so initially they were a little hesitant, they were not knowing whether the material can be sold or not. But finally they found that the market is moving.
And since the market is moving now, they have started buying the material and they are also stocking. And that's the reason the demand has picked up. And simultaneously, the downstream industries, MSME industries, they are also coming back online, and government is also encouraging them, promoting them to restart the business. So we are just waiting a major demand which can again come after the train services are resumed. Today, still the Indian Railway is not operating from the states like Jharkhand, Bihar, Odisha, Bengal, Chhattisgarh, UP to the major towns or major metros. So once the Indian Railway they start operations, bringing back the migrated workers to their workplaces or to the sites, then demand will further increase.
Okay, great. What about the export market as well, Mr. Sharma? If you could share with us in the price differential between the Indian market and exports currently?
There's hardly any difference nowadays in export versus India. So mostly the prices are similar. But there are always some advantages and disadvantages when we export in terms of loading the mills and in terms of order book size and also the rupee to dollar exchange rate. So that plays a very vital role. Till last month this was excellent, and we did export about 40% of our total produce, and so are the other people. So our entire steel industry is now reaping the benefits of exports. So I'm sure these exports will continue because worldwide the steel demand is very firm.
All right, Mr. Sharma, really appreciate your time and thank you for joining us. Meanwhile, if I just turn attention to markets, what do we have there? Well, serious uptick in idea. I mean, if you have to say that idea is one stock where we've seen extreme volatility, extreme reaction, lot of speculation. There is speculation because we don't know what's coming next. I mean, before the AGR verdict, the speculation was that the AGR timeline would be 15 years. Now the speculation is that IDEA will get a foreign partner, or IDEA will be able to, or telecom companies will go to the court and they will be able to redefine the AGR amount which is due. We don't know. There is a case that they may go to AGR, they may go to telecom companies, they go to court and file for a review petition. But right now it's all source space. But the stock today, I mean, just check this one out, 23% higher for Vodafone Idea, for a stock which on Tuesday after the verdict had plunged to about 8 rupees, is now at 12.5 rupees. Sandeep, I'll be repetitive with this one, but you cannot keep your eyes off. I mean, if a stock is up 23%, even though it's a 10 rupee stock and has moved 50% after the judgment, you got to ask yourself why.
The reason for why was apparent on that day itself, and that day itself I had said that I cannot fathom the reason why the stock is falling, because the judgment seems to be positive for both Bharti and Idea. So that day it fell. Then people realized that no, this judgment does nothing to the survivability of the company. Then the company also came out with some statements, and the stock is rallying now. So I think people are giving too much weightage to the statement by Mr. Kumar Mangalam Birla that we will not put any more money. Obviously, they are not going to run away as a group from the business if they think that the bottom's been made and things could be better going forward. Business and the company survives, and that's what is getting reflected in the stock price. Can it go higher from here? I guess I'm sure it can. I'm sure it can go much higher from the current levels also. Would I be buying this? I don't think so. So I'll just be sticking with Bharti.
From the cement space, Grasim has moved higher, but remember, Grasim is a holding company. Grasim has ownership of Ultratech and also Idea. If the view is that for Idea to raise capital, Grasim will not have to put out money, that's, even though the ownership is not very large, that is going to be supporting the balance sheet of Grasim. So Idea goes higher and Grasim goes higher. Well, it's not cement which is going higher, it is Grasim which is going higher, which happens to be an holding company of Ultratech and the VSF business of the Birla Group, and also they have ownership in Idea. Let's take a break with the news that we are looking good. The sector has to be, the top sector has to be autos, followed by consumer, and the star, I mean not the star, but like the mesmerizing stock is Idea all the way.